Hello and welcome to AI Market News by LM. Well, this week we're digging into a pretty big sentiment shift in the markets. After a really strong run, it feels like all that optimism just hit a wall. So let's break down exactly what happened. You know, it really felt like the party came to an abrupt end this week. That whole wave of market optimism we've been riding, yeah, it crashed. US equities, after weeks of some pretty solid gains, suddenly reversed course. That snapped a winning streak that had a lot of us feeling pretty bullish. And leading the charge downhill was the tech sector. The Nasdaq's sharp drop wasn't just, a bad day at the office. It was a really clear signal. It feels like the market's mood has soured, shifting from that risk-on appetite for growth to a much more cautious risk-off stance. And looking at the numbers here, it's pretty clear just how widespread this pullback was. All three major US indices finished the week in the red, with the tech-heavy Nasdaq really taking the biggest hit of them all. So what's got investors so spooked all of a sudden? It's really a cocktail of concerns. There's this broader economic anxiety bubbling up, a much-needed correction in some of those high-flying tech stocks, and we're even hearing warnings from some company leaders about market froth. That term for when asset prices just seem way too high. It all adds up to a very, very nervous market. Okay, so where is all this anxiety coming from? Well, a really big piece of the puzzle can be found right in Washington, D.C., where all the political gridlock is starting to have a real tangible impact on the American consumer. At the heart of it all is an anxious consumer. And that's the key. This isn't just a political story anymore. It's rapidly turning into an economic one. And the data, wow, the data backs this up in a big way. The University of Michigan's Consumer Sentiment Index has absolutely plummeted. We're talking about a near record low here. And this isn't just some abstract number on a chart. We are talking about real-world consequences. This government shutdown is now the longest in US history, and it's chipping away at confidence every single day. We're seeing threats of major flight cuts because of staffing shortages. And the political stalemate, it just shows no signs of breaking. This is exactly the kind of uncertainty that makes people close their wallets and stop spending. Now, this domestic anxiety isn't happening in a vacuum. So let's zoom out for a second and take a quick look at the global economic picture. To get a sense of the global economic pulse, let's look at the latest Purchasing Managers Index, or PMI data. You can think of it as a monthly checkup on the health of a country's key sectors. Anything over 50 means things are expanding. Here, we're going to compare the US manufacturing sector with Japan's services sector. Now, at first glance, this looks pretty positive, right? Both the US and Japan are showing headline growth. But the details tell a much more complicated story. There's a real divergence happening right below the surface. Over in the US, the manufacturing sector is basically being held up entirely by domestic demand. Export orders are falling, and that's a direct result of ongoing trade tensions. Meanwhile, in Japan, this services sector is still strong, but both new business and foreign demand are slowing down. This could signal some weakness ahead for both economies, and it definitely creates a tricky situation for currency traders who are watching pairs like the dollar-yen. It's really a classic tug-of-war between conflicting signals. All right, so with all of this uncertainty just swirling around, what's the key event on the horizon? What's the one data point that's really going to shape the market's next move? So looking at the economic calendar from investing.com, one event just jumps off the page: the US Consumer Price Index report, the CPI. Now, we'll get some interesting data from Germany and the UK, too, but the US inflation number, that is what everyone is going to be watching. It is the main event of the week, hands down. For a market that's really on a knife's edge, this report is absolutely crucial. It's going to give us the clearest picture yet on inflation, which in turn will directly impact what the Federal Reserve decides to do next with interest rates. A hot number could send markets reeling, but a cool report, well, that might just bring back some of that lost optimism. So yeah, that is the big question hanging over the market as we head into next week. Now, before we sign off, just a quick note. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching, and don't forget to like and subscribe.